Traders, Cousin Vinny coming to you from theclosingprint.com on February 28th, 2016. In this video, we'll cover the indices which all closed higher last week, with the Russell up 2.73%, by far beating the other indices. Trends, we have a weekly uptrend unfolding. If you read my weekend blog post on Saturday, you might want to check that out. Daily, we're expecting back and fill, but higher as we go into the end of the month, the 29th. Window dressing, we're looking for a turnaround Tuesday. Tick and Tick Q are both higher, as is NYSE and NASI for both the New York Stock Exchange and Comp. Breadth is positive across several measures. NYMO is a bit overheated, but it can back and fill like it did back in October. We cover that in the weekend blog post as well. NYHL is above zero for 7 days now. CPC, no signal. Macro risk, the dollar had a huge move on Friday. We have the US dollar yen pair moving higher off a double bottom of recent price action. China currency devaluation possible in the near future, and G20 stimulus on the table this week. We have bonds, TLT, IEF, AGG, and BBTIX all sideways after a pullback, with the bond stock ratio pulling back further, signaling more bullish action. Commodities, crude oil is higher. We have the 10E 30MA cross, and gold under pressure with the US dollar higher, of course. Sectors, we see many of them looking much better. IYT, XLF. The latter has a Kirby, which price action could push above this week. Most of the banks are looking much better. They have shown inverted head and shoulders, which some of you have pointed out. And overall, the sectors look pretty constructive. Volkowski, his site shows all green up arrows, and of course we'll look at the IBD50 and more setups. On Saturday, we covered the S&P 500 spiders, monthly, weekly, and daily charts. You might want to check those out, as we'll cover those as well herein. With regard to the monthly, what we were looking at was the fact that price action is still below the 10 SMA. What happened previously in the year 2000, 2007, when prices crossed below and closed below for the month underneath the 10 SMA, price action that followed, we had bounces that came back up to the 10 SMA and failed, which is what we're starting to see here. We had a bounce at 190.50, and then this month in February we see a higher low. Now we're expecting this to come up to a level around 200, which we'll cover on the weekly chart as well, which, if you follow Elliott wave theory, we could be putting in a major ABC wave down, with A being this low here, B being that 200 level we just talked about in the monthly chart, the descending 10 SMA, and then a lower C wave, which would put in lower lows. Now we're looking at possible targets down here, but for now we're going to wait and see what happens this week and next for a push above these levels at 195.50, which we draw here with this highlighted area as a possible resistance zone, where we saw some selling last week. A pullback. Now with price action above the 10 EMA, we're looking for a price move above that level into the Kirby, which we'll cover in the daily chart, where we see the same areas, the lows in stochastic, which is pushing back up into the red zone. MACD has positive momentum, and tick cumulative shows the obvious entrance of institutions, with their sentiment showing obvious buying at this point. What we're looking for is some back and fill, possibly a pullback to this volume by price support level now on Monday, being a window dressing end of month, and then a push higher into Tuesday. First targets are 197.52. Notice the Kirby up here. Prices don't get really crazy until we hit 205. I don't think we're going to get that far. Perhaps we overshoot 618, get up to around the 200 to 202, and then reverse lower for that C wave to the downside. The 60-minute spiders are cycling as well. Note the 10 EMA is above the 30 in most cases now, with price action right around 194.95. We hit nice levels on Friday morning, then sold off. We took 3/4 of our position off at the highs and that gap. We decided to swing from Thursday, and we're holding a quarter position now going into Monday. Note where MACD is above the zero line, nice volume at the end of the day, and we have stochastics in the green zone. Tick cumulative continues to move higher, so this could turn around on Monday. We'll have to wait and see if confirmation comes in the form of internals, whether bullish or bearish. Let's review the NASDAQ 100 for a minute. We pointed out the obvious Kirby level here, this little pocket, in last weekend's video. We pushed into that level. We have the 50 period moving average overhead now, and we also have this volume by price band overhead as resistance, in addition to the Bollinger Bands overhead at around 43.50. MACD continues to push higher, showing bullish momentum on lower volume. Stow is in the red zone, and we have the NASDAQ A50R, the number of stocks trading above the 50 period moving average at 48%, continuing to move higher. So we could have some follow through, and we can also have some consolidation here at the 50 period moving average. We'll have to watch for that early Monday. The Russell fared much better, IWM. This is the monthly chart. Here's the 10 SMA that we pointed out on the spiders previously. Looking for that ABC wave down. We have the A wave here, possibly a B wave up to this 110 level where the descending moving average is overhead. We have resistance now as well, right around the 107 level. Stochastic continues to move lower, as well as MACD. So look for a bounce here. IWM did quite well last week, faring much better than the other indices. A nice follow through as it moved above this volume by price band into this Kirby we pointed out in last weekend's video. Note Stow is in the red zone and MACD is above zero. We have the 50 period moving average here and a spinning top on Friday. Upper Bollinger Band is around 104.75, 104.80. So look for some resistance overhead on IWM. Looking at the S&P Midcap 400 index, we have an overhead level around 1370 as resistance. We have previous support, which is now resistance overhead as well, at 1360 or so, starting around 1344.60. Stow is in the red zone. MACD is trying to get back above zero. Overall, the S&P 1500 composite is looking pretty good. We have a chart here of the composite 1500. That's the S&P 500, mid-cap 400, and small-cap 600. In between moving averages, overhead, a little bit of resistance up here at 459.54, just overhead. Stow's in the red zone, and MACD is clearly above zero. If we look at the S&P 1500 new highs minus new lows percent, we have a histogram and an indicator of sorts with a moving average which is crossed this week. We have a buy signal on the histogram. If you consult that closely, you can see it's above this horizontal line, which is an indicator of sorts. And of course the index itself continues to push higher with resistance overhead around 450. While the New York Stock Exchange Composite Index of 2,000 stocks has the same sort of look. You have this Kirby pocket right here. Prices are above the 50 period moving average, the green line. Stow is turning back up. And we have the high-low indicator, which is a 10-day moving average of record high percent. It's a simple breadth indicator. In addition to NYHL and NYMO, we watch this. When above this 50 zone, that indicates new highs are expanding and outnumbering new lows. So keep an eye on this going into the week. This could turn, but for the most part, it's confirming a bullish bias. In addition, here is the Wilshire 5000 Composite Index, obviously 5,000 stocks. Prices are above the 50 period moving average. MACD is moving higher, And you can see Chaikin money flow is clearly very positive. So this is a bullish sign. We could see some back and fill, obviously, but for the most part, this is a bullish confirmation. Here is a chart of the S&P 500 weekly. In the upper panel and in the lower panel is the bond stock ratio, the 10-year to the S&P 500. We use this for indications of bullish or bearish bias in the markets. With this move lower, that's a bullish indication. This could continue to move lower. It could bounce, and we would see a move lower as bullish and a move higher as bearish on a weekly basis. So this is something we watch during the week, and we post from time to time on StockTwits as well as Twitter. We also have more indications of breadth continuing to move higher. Note this is the advanced decline for all common stock on the NYSE. There's over 3,100 stocks, I believe, traded on the NYSE. Prices continue to move higher. This is the composite. And stochastic in the red zone, MACDs continue to move higher. Now this could turn back down off the upper Bollinger Band, but for the most part, the advanced decline looks pretty constructive. Here is the new highs minus new lows, another breadth indicator we like to follow. Note the number of times it's spent above zero this past week. Conversely, the number of times it's spent below that same zero line over the preceding couple of months. So we're starting to see a trend change. Note 10 EMA continues to climb and could cross back above zero, which would be a bullish indication like we saw back here in late October and November, which leads right to the NIMO, which a number of you had shown concern with. What we saw back here in October is a clear indication of what could happen. Again, note that in October, as we just saw in the NYHL chart, prices continue to move higher, backing and filling on the way there. We could see the same thing with NIMO. Just because NIMO is above this level, it is overheated, but we could see this back and forth action like we saw back here in October. So don't forget about that. NYSE, the summation index, continues to point higher. It's headed straight to zero. This looks more bullish than bearish. Currently, we do not have a crossover to the downside. Rounding out the analysis, here is the TLT 20-year bond. Prices moving sideways. Looks very similar to the gold chart. Stochastics moving lower and MACDs moving sideways, but is above the zero line. Look for more consolidation in bonds as we put in that possible ABC down leg in the S&P 500. Look for resistance to hold on the indices and for bond prices to continue its move higher as we anticipate. Shifting gears for a moment and looking at the sectors for catalyst, note that many of the sectors are moving higher after being below their 20 and 50, like we see on IYT. Transports, XBI moving off the lows, XLB above is 20 and 50, XLE same there, XLF is starting to push higher. Note the money flow index. Money flow continues to push higher off of lows. If we look at XLF, note the Kirby we pointed out in the opening monologue. If prices move above this level, which it clearly looks like it will, inverted head and shoulders here. Most of the banks show the same sort of pattern. HCPG pointing out GS last week, possibly a move lower first and then a move higher. In any case, we see price action could conceivably continue to move higher, break above this neckline, Bollinger Bands start to expand, volume come in as more people start to realize that banks may have put in the lows for the year. Conversely, XLP and XLU, both defensive sectors, both saw selling. Outside day on XLP and XLU is also pushing lower. In addition, XLV, XLY continue to push higher. Taking a ratio of staples, defensive sector to consumer discretionary, XLP to XLY, if you're bullish, you want to see this indicator continue to drop like we're witnessing currently. When we saw a move to the upside in this ratio, that indicated that these higher lows would probably break down, which actually happened in late December. So you had this forewarning that price action could develop to the downside. Now we have the ratio moving lower. that's bullish for equities until that changes. Real quickly, we'll look through relative strength to the S&P 500. If you look at this ratio right here at the top left, this is IYT, the SPX. Note that this continues to move higher as price action confirms. If we show IYR, real estate shares, moving higher as well. XLB, moving higher. Materials, XLE, moving sideways. Looking at the industrials, moving higher. Strength there. Look for setups in these sectors. XLF, if you draw a trend line through here, we just broke trend Thursday, Friday. XLK, moving sideways right at the 200 period moving average. XLP, as we pointed out, turning down. Note the lower high. XLU, same thing. We put in a red bar, Elder Impulse, lower high here as well on XLU. XLV, healthcare, moving sideways, was performing. Now prices are right at the 50 period moving average. These are all tailwinds for the spiders and the S&P 500. Note the relative strength indicator to the S&P 500 is moving higher on XLY to SPX with the 200 period moving average overhead as well as resistance. Look for setups in all of these sectors when you're trying to put money to work. Here is the IBD50 list for February 28th, this weekend. I've sorted these by sectors. Note cyclicals, as we pointed out, financials, technology, industrials. We'll look at some of these names for setups going into the week. Note how well some of these names are doing. Acuity brands, building materials in the XLB sector. What you want to look for is a 10E30 cross. This shows you that trend is changing. Prices above volume by price bands. Into the Kirby, MACD's moving higher, Stowe is overbought. Broadcom, semiconductors continue to move higher, 10E30 cross, MACD above the zero line. Cadence continues to grind higher. We pointed this one out a week ago. MACD above zero. Cal-Maine, outside day. We'll move along. Campbell Soup, we're out of this one since Tuesday. Had a nice push on Friday. Unfortunately, missed another dollar on that one, but we have a shooting star on Friday. Keep an eye on that one. MACD is very elevated. Stowe is turning down. If you still have shares, Citrix Systems continues to grind higher. 10E30 cross, MACD, and Stowe. 10E30, the 10E Stowe MACD setup. If you've read my book, you know what I'm talking about. Coresight, a new name in the realty, specialty REIT, continues to move higher. A little shooting star off the top of the Bollinger Band. 10 above the 30, MACD crossing, moving higher. Stowe overbought. Dave & Buster's continues to grind higher. MACD's trying to get above the zero line. Dollar General looks like it wants to have a breakout here. Note MACD's pushing higher and Stowe is in the red zone. Edwards Life Sciences continues to push higher along the upper Bollinger Band and the 10 EMA. MACD's pointing higher. Could turn this week. Keep an eye on that. Ellie Mae continues to burst higher. Equifax higher. MACD trying to cross zero. Equity Lifestyle Properties was on the list last week. Continues to grind higher between the upper Bollinger Band and the 10 EMA. MACD's higher. Stowe's turning back down, so it could flag out. Facebook, look for these names to continue to move higher. The FANG group, Facebook, Amazon, Netflix, and Google. No Bollinger Bands are starting to tighten. This one could move sideways here and consolidate. Five Below, pointed this one out last 2 weeks, continues to move higher. Global Payments, moving higher. In the finance group, note this is part of XLF as well as insurance. Home Bank Shares, nice relative strength in this name as far as a bank is concerned. 10E30 cross. MACD above the zero line, above its signal line, still turning back up. The 10E still MACD setup. No Bollinger Bands are tightening. Kirby overhead. This one could bolt higher very quickly. We have resistance overhead between 45 and 47 recent highs. J2 Global, Internet, Doji there. MACD is trying to get back above. LGND, Lagan Pharmaceuticals, starting to look like it wants to cross. 10E30, trend change. Note the volume by price band. MACD's turning below zero, turning up. Keep an eye on it for the next week maybe. MSCI, Specialty Finance in the XLF sector, trying to break out here. MACD above zero, could turn down. Note when MACD starts to turn, it just means momentum is slowing, so keep an eye on that. If you're thinking about entries, wait for a pullback possibly. A lot of people just are doubting Michael Kors. The retail sector, XRT, continues to push higher. MACD, nice trend, and still in the red zone. Monolithic power, semiconductors, nice little descending channel, holding off that lower channel line now. Could break higher. Watch for a 10E30 cross. MACD continuation and still continue as well. Consumer services, higher lows, putting in something of a triangle pattern, could break higher. Stowe's turning down, so maybe this wait on this for a couple of days, maybe a week. Nike trying to break out. Consumer discretionary, MACD trying to get above the zero line and still in the overbought zone. Nuance Communications, we pointed this one out last week as well, continues to push higher. Hope you took some of those shares, looking good. NVIDIA, gap and go, continues to work. Looks like it's a little bit of consolidation here before it hits that 3382 level. MACD full of momentum. Stowe could reset and turn back up first. Keep an eye on that. Note the volume, huge volume in NVIDIA. O'Reilly Automotive, outside day. Paychecks in the financial, XLF, remember those names. Continuing to push higher. We had a little bit of selling there on Friday. Lower volume. MACD just signaling maybe a slowing momentum. PayPal Holdings, this one looks like it's going to break out of this level right here into the Kirby. This is a good setup for the week. MACD's turning higher and Stowe overbought. Look for a push higher. Pool Corp trying to push higher. MACD above the zero line. Prestige brands, MACD above zero, Stowe pushing higher. Priceline flagging here. Lots of resistance up here. Look for a push higher or push lower. Above this level is bullish, below it is bearish. Momentum is just slowing, consolidating. Look for a change in character. Public storage at previous highs. MACD pushing higher. Stowe's resetting. Ross Stores retail could break out here, consolidating right under that breakout level. Ryanair Holdings in the IYT sector, which is showing relative strength. Looking good. Stowe turning back up. Six Flags setting up for the summer and spring. Smith & Wesson holding at highs. MACD's continuing to move higher. Smith Corp continues to push higher into the Kirby. This one looks good. 10E30 cross. 10E Stowe MACD setup. Looking good. Self-storage. Sprouts Farmers. This one is a competitor for Whole Foods. Continues to break out here. Note the overhead supply, lack of, same. MACD's pushing higher, Stowe turning back up. Another good setup on a retail food group name. Stamps, gap higher, 10E30 cross. This is in the XLY sector. Store Capital breaking down, high volume, not interested there. Sturm Ruger, another name breaking out. Nice triple top breakout. Stowe and MACD look good. Low volume. Look for high volume continuation to continue to show for continuation. TIL Education, outside day, back to the 10 EMA. Look for support here. Pull back to breakout possibly and a bounce. Toro Corp flagging out. Pennant. Universal Display. 10E tried to cross and turn back down. Probably earnings related. Gap. Probably gap and fade. Maybe a cap and go to the downside. Vantiv. Technology and software. Spinning top. Long-legged doji. MACD above the zero line. Pulling back. Possibly a better setup in the near future. If this consolidates and flags, puts in a handle, cup and handle. Verisk Analytics, Business Support Services, I guess that's in the XLF service as well, sector. Not crazy about this pattern, but it is flagging out. Could push higher MACD above the zero line. WC Energy, it's almost an outside day. Didn't get that high. WebMD performed well last week. And that's it for the IBD50. So that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. Over the next few weeks, I'll be announcing some changes to the blog. The biggest change will be adding features that'll be in the form of a member-only fee-based concept, while I attempt to balance my wife's concerns and still offer exceptional quality advice for minimal cost. I do have to compensate for my time to keep my wife off my back. In addition, I'm having some squabbles with Google, so I'll no longer be using them for advertising on the member side. I spend countless hours each week, which I do for free currently. I'm pondering the free subscriber area will still have some free weekly updates of some form, a partial game plan perhaps for the day, possibly in the form of a summary of thoughts. Though most of what I've done in the past will now be in a subscriber format. I'll try to keep this as close to free as possible. I'm thinking maybe $4.99, maybe $9.99 a month for continued service. What you'll get is the member services, which I'll outline in the future, but basically it's an access to all the free subscriber content, access to a daily game plan, which will be more or less designed around several times a week, access to all of my charts, which will be different, so you don't have to wait for my posts. You can actually access my stock charts account. You'll have to have a stock charts account as well. Access to free special videos geared towards the mentor-student instruction for new traders, much like that of my book, and strategy videos. Access to future forums, and access to a chat forum, which will have a chat room set up. We'll also have detailed chart setups, 2 to 3 minimum per week. Mostly will be released during the weekends. I envision a lot more in terms of targets. We can look at stops and so forth, depending on the bias in the markets. So look for those changes to be announced in the week or two ahead, as we will update you accordingly. I hope this helps. Take care, and we'll talk to you on Monday.